0.08% decline. That was the number that we saw the market as of yesterday. It was a decline. Not closing on a great start for a lot of investors because that was a bearish move as at yesterday. But right now, we're going to take a look at beyond the NGX performance yesterday. We're also taking a look at what is happening regarding a new proposal on board. Now, there's a new proposal. The market closes by 2 p.m. on a regular base. But right now, it looks like stakeholders are saying, hey, we can't just allow the market to close by 2 p.m. while we have the corporate world closing by 5 p.m. Let's us extend the close of the market to 5 p.m. We are going to have that conversation on this episode of Market Watch. And you know I don't come alone. I have able gentlemen. One is a city gentleman. Another is a financial analyst. Is a massive and a doyen, I love to call him, a doyen in the capital market. We're also going to be taking a look at what is happening regarding inflation. The numbers, 21.88%. That is the number as regards inflation. It's gradually coming down. But is it really reflecting in the marketplace? We're going to find out whether that is the reality in the marketplace. The banks are also saying that, hey, we need to announce new CEO 3 months before the exit of the outgoing one. All these conversations on Market Watch. This is brought to you by Nairametrics Television. Now I have the city gentleman, Idike Aja. You're very much welcome to this episode of Market Watch again.
Yeah, thank you very much, Frank. It's good to be back.
And then we have the doyen. I love to call him the doyen. It's been a long time, sir.
Very long time, Mohammed. Always a pleasure to be on the program that you anchor. Always a delightful time to be with you.
Thank you. Let's start with what happened yesterday. The market, 0.08% decline. Not a great performance. And this is against the backdrop of the market we experiencing consistent decline in the last 4 weeks. Yeah, that the market that we've been experiencing consistent decline. What do you think is happening to the market? Let's start from there.
The market need a trigger. That trigger is not coming in yet. Yeah. We are in September, and hopefully this September we'll begin to get some of those triggers, especially from the industrial goods sector, from the manufacturing sector, from the telecom sector, from the banking sector. And then in the banking sector, then you get from the normal the tier 2 banks or thereabout. Maybe the only tier 1 bank you might get third quarter result from is First Bank. The other ones are still waiting for CBN approval for their results. That also could be a major trigger in the third quarter. Oh. If that comes out and then they release their third quarter results, that could be. So it's not surprising. There's no any trigger in the market now. What we are seeing in the market now is profit taking, good entry point, good exit point, traders market, investors sitting on the fence, looking at procedure. Is the price right for me to enter? Is the price not good for me to enter? Yeah. So definitely that's what's happening. So pullback for me, not surprising. But if you look at those pullback, then you also have to look at the volume. The volume were quite impressive despite the pullback. So that tells you that a lot of investors are looking at that pullback as a good entry point.
Idike Aja, what do you think? Do you share the same sentiment?
Yeah, I do. I do. But, I'm more or less a longer-term perspective. So, yes, I see it as a normal thing in stock trading. Yeah, it goes up, it comes down. So, yes, like I actually mentioned, the triggers are not there. Yeah, and especially the results from the big banks, as the figures are yet to come in, and as they release them, likely it might have some great impacts.
But there are some conversations around, look at what is happening with UBA, Fidelity, Zenith Bank. They all dragged the market to, I don't want to say, they made the market quite bearish. And it looks like it's as a result of investors taking profit. So what is your take about that? Why do you think investors are focusing on taking profit at this point in time? Is there something they know that we don't know?
No, I don't want to look at it from that angle, especially the banking stocks. They are raising capital now, and the information out there, especially those who have met and those who have not met. But that is not really the problem. Yeah. Like I said, I see this the movement, the volatility in the stock market as a normal thing. it comes in like that.
Yeah.
So it's not really a big deal. So I wouldn't say that people are really taking in profit, because if you look at the banking sector, the index, compare it with other like consumer goods and industrial, they are equally doing well, especially the insurance and the consumer goods.
Yeah, the insurance
they
has
are
been
doing
doing
better than the banking sector. It hasn't really be that up impressive this year compared to consumer goods and the insurance index. So I wouldn't say, like we already mentioned, let's wait until the results are fully out. Yeah.
Mukhtar Mohammed, what do you think about profit taking? There's a lot of profit taking happening right now. What's your take?
Well, it's like I said, it's normal. I buy good and I take profit. Again, when you look at those three mentioned banks, they have something in common. Three of them are waiting for CBN approval for interim dividend.
Yeah, true.
Look at after three of them, you realize that the only one that is fully recapitalized.
Yes.
One is in the process of doing his right issue, and is even extended his right issue because of the public holiday. But some people will say, if it was the public holiday, why don't you just extend it by 2 days? Is it that people are not buying? That's why you are putting it at 2 weeks. That's also, it's running in the investors' mind also. And then also you have to look at those three stocks again. Are people selling off because they have one or two information that other people don't have? Sometimes again it's perception. Perception in the sense that, okay, at the price I'm selling off, I can easily exit and come in at a good price.
Yeah, true.
So all these are playing, but by and large, if you look at those three banks, they are very strong fundamentally. There's nothing to be afraid of, especially when you look at a bank like Fidelity. It has moved from I think it has moved from a tier 2 bank almost to a tier 1 bank now. At that price that it is it's still a good bargain for investors. You look at UBA, if a bank is telling you that I'm doing my right issue at 15 naira and you see the price drag down to 47 naira, I think for a designing investor like Mr. Njika that say I'm a long-time prospect, that's a very good place for him to be. And then he wants to just go in there and then mop it up and knowing fully well that I'm buying at a discount already. For Zenith Bank, they're antecedent in terms of dividend payout. They have been consistent and nobody expects that to change. But again, like I said, three things in common with them. We are waiting for CBN to approve. Will that approval come? Remember before now, we had that news that they might not be able to pay. Investors should just forget anything interim or final dividend for the next 2 years.
Yeah, true.
And now we saw the bank saying, look, I've exit forbearance. So if I've exit forbearance, then I'm able to pay dividends. What will that do to the Nigerian investors are dividend crazy.
Sure.
So once that comes again, that tells you that, the banks are in a good position. They still pay dividend despite all what we've heard about it. And so, like I said, it's a perception.
Yeah.
And again, you have to look at what we call comprehensive analysis in the market. You look at the price it is. Am I exiting? You talked about the insurance stocks being very, very good. We'll go to that. The inflation figure has come in, it's easing. Doesn't mean Nigerian can buy more. That means the consumer goods sector is something you begin to look at, because if you see inflation is easing now, then the cost of some of these goods will come down. So a lot of Nigerians will be able to afford to buy more. Would that have an impact on their bottom line?
Sure.
So all these things are playing out on investor mind. And like I said, we just need a trigger. Once that trigger comes, if it's a positive trigger, you see the market respond to it. If it's a negative trigger, also it creates opportunities also. Because again, it could just be a short-term negative trigger that could also result to a long bullish run.
So vast majority of Nigerians in the corporate world, they work from 9 to 5. As a matter of fact, it's a linguer. You do a 9 to 5 or you're an entrepreneur. But here is it. The market closes by 2 and people are still working till 5. So what happens within that time frame? And it looks like there's a new proposal on board saying if we have workers working till 5 p.m., why can't we have the market continue till 5 p.m.? So gone are the days of 2:30 p.m. We're having that conversation now. I'm going to start with Idika. What do you think? What do you think about the 9:30 a.m. to 2:30 p.m.? And right now, there seems to be some slight adjustment from 9 to 5. The market is going to be stretched to that time period.
Well, it is still under review. They are still under review.
Yeah.
They are discussing it. But for me, yes, it is actually a forward-looking issue. And that is really good if properly managed, especially when you look at the trend now, especially in terms of online trading.
Yeah.
So that will give room for people, young people, those using smartphones to trade online. So at least if they extend it, fine, that would be okay. But everything equally has a element of risk.
Yeah. What's the risk involved?
Well, the risk involved, if you stretch it, like now we are here, of course, the operational cost is there. If you stretch them, the operational cost is there. Then you stretch it by staff costs, energy costs, even the back end processing.
Yeah.
Everything actually would be stretched. And again, which is very, very important, by the time you stretch it down, you might have a liquidity problem. And that might increase the spread between the bid and the ask. So, yes.
Mr. Mohammed, what do you think? Do you share the same sentiment?
I totally agree with him. Just to add a little, the positivity in it. You see, I think again they are trying to attract more foreign participation in the market. If you look at the time difference, sometimes if you are outside the shop, the country, let me say you're in this place like outside the UK or European, you're trading from like the US. At the time you are working up, but sometimes the market has closed.
Yeah,
true.
So I think again they are trying to look at that, so they also will participate. And I think global best practice is normally the market open. You talked about the New York Stock Exchange. It opened at that time and closed at the normal closing time. But again, like my colleague has said, in terms of cost, I think that will now bring more cost to the stockbroking firms, especially when you look at our country in terms of power. That means they may have to stretch. But again, the digital platform is available also. To also some brokerage firm might just switch to the smartphones and investors trading and making their requests on that. But again, the back end, you can't do the back end outside the office, taking the trading, make sure everything is done, uploading, and I think that is where the challenge will come. And if it comes with an extra cost on the brokerage firm, are you not saying that investors may have to bear that cost? On that, the brokerage firm may also have to increase their levies to meet up with this extra cost. And also, how does that have an impact? You have said one impact, liquidity. That is also a big chart. But again, it comes with an advantage. There are a lot of people that could say at the time these foreign investors or investors in the diaspora are waking up, they might also inject a lot of liquidity rather than just waking up and there's no liquidity. Again, the market is closing for the day. I think it has its positive side and
has a negative
side. But again, like he said, everything is a risk when it comes to the market.
But I also love the idea of the fact that we are considering money market. I mean, money is coming from the capital coming from the West, the US. Sometimes when they are just waking up, 8 a.m. in the US sometimes is around 4, 5,
2.
Yeah, 2 p.m.
Depending on the state you are.
Exactly. Thank you. That's even very, very important. And so if it's 2 p.m., meaning the market is closed.
Almost
closed.
Yeah.
So what time do you even have to invest?
Yes.
So I love the idea because do you think that will counter the liquidity problem you're talking about?
It could help.
Yes.
It could help because, again, you have many people waking up to inject liquidity.
Yeah.
Because by the time they wake up, sometimes what you see is that when they wake up, like you said, the market has already closed for the day. So they look through the market and inject liquidity for the following day.
What you're saying is very important. Even I trade. So sometimes I trade and currency pairs. And so if you look at Japan, you look at the US Open, my eyes always on 2 p.m. US. That's 2:30 p.m. Nigerian time. That's 8 a.m. in the US. Midnight I'm looking at JPY. So sometimes you want to be, you want to stay awake to make sure you monitor some of these.
Yeah, I agree. But I think the major disincentive there is just the operational costs. Operational costs that will definitely will come in.
Yeah, because
it will definitely come in.
Like most stockbroking firm close around 4.
Yeah.
Most of them after market close at 2:30, they'll have about 1 hour of 30 minutes to do all their paperwork and book balancing.
So their end of day program.
So what it means is that when the market close by 5, especially when you're in a place like Lagos, at 5 o'clock the traffic will start building.
Yeah,
true. So that also, I think it has its positive side, but also I like what my colleague said. It's a proposal, so let's see how far we can go. But I think I like it. But again, it comes with its own challenge.
Okay.
20.12%. That's the current inflation number. And it fell from 21.88% in the previous month. What is your take about inflation? Let me hear from what's your take about inflation?
Frank, first of all, we should ask ourselves, is that data really boiled down to policy, or those data are really boiled down to certain places that you take those data from? You ask yourself, why are we having those low figures? Because at the close of last year, if you and I remember, we had about 30-something% in terms of inflation. And then we came with the rebasing, and rebasing dropped it. Rebasing is not a tool to drive down inflation. Rebasing is supposed to be a tool to let people know that there's a new side in your economy that you really want to play. So what that has been, that is why people will say, oh, this inflation figure that we are seeing is not comparable, is not the reality on ground if you go to the market. But again, let's work with the data that we've been given by them. Then if we are working with that data, if that is the data and that data is true, then it's good. But in reality, people are saying it doesn't add up to what is happening. But if you look at the data, then you see it very impressive, and that we are seeing inflation ease. But again, you look at it, it's fragile. It's still fragile, because you are not seeing those drastic reduction in terms. You have seen food cost of food has come down, but it's not where it used to be before.
Sure.
You have to also realize that inflation in Nigeria is not largely driven only by one issue. One food. There are other variables that comes in. Cost of transportation has not gone down drastically. Cost of funding has not gone down drastically for companies that are borrowing. So there's still a lot of work to do. Energy cost is still very high. To add to
it, I agree with him. But even if you look at the core inflation, that's when you strip the food and the energy aspect of it, and you look at the core inflation month to month, based on the data supplied, it even increased. So that really shows, that goes to buttress your point. That really shows that the pressure is still there. It's still fragile.
So that is why.
So it's only the headline inflation that has come down. You understand? Assuming if we take the data as given. You understand? If you take it, but bottom line, anyhow, the most important thing for me is the, let me put it in what, the theoretical impact of the news.
Exactly.
Of the news. Because the essence, the bottom line of the whole thing is that, okay, inflation has come down. It's now 20.13% from 21.88. Fine. So what is the impact theoretically? If you look at it, okay, fine. You measure in terms of the real return.
Yeah.
So you see, if you are invested and the investment was giving you, maybe say, okay, let's say 21%, and now inflation has come down to 20.33. That means you have moved. You have a real rate return. That is the angle I always look at it. Not even whether they actually, in practice, whether the thing has come down or not.
You are looking at it because you are an investor.
Yeah,
true.
But for the man on the street, he's looking at it as the cost of food. Has it really come down? So that for me is the challenge.
Is the challenge.
Is the challenge. Is the major thing.
Yeah.
Because again, like I said, theoretically it looks nice for investors, for data gathering, for attracting positivity into your market. But again, you need to look at all these tools that are driving down inflation. these two are largely driven by monetary policy decisions. So monetary policy decisions alone cannot keep inflation down. And that is why if the CBN meets tomorrow, they might be holding rates. They won't be cutting rates. Because they know that the physical side still have a lot to do for them to maintain. So it's very fragile.
So your predictions for the 22nd is that they are going to hold rates?
Look, it's very fragile. I don't know. Sometimes you predict this thing and they come up with data that you don't have. But based on the data that we have now, it definitely we are supposed to be seeing rate cuts.
But some people would say that the transmission mechanism in our country is not always that fast. So if you raise your rates just to tame inflation, before the market will start feeling that impact, it's going to take a very long time.
Because
you
not
think
real.
That the market
because not real. It's not looking real. If it is real, immediately you bring it out. If the market respond. If today there's a cut in the US,
yes.
If today, like what the president of the United States, Donald Trump, is pushing for, if today there is a cut in the US, that day, the market responds immediately because they are seeing the reality of it.
But we have different markets.
That is what I'm saying. We have the complexity.
That's why I'm talking about the transmission mechanism.
The transmission mechanism is already. You look, see, ordinarily, when you have a rate cut and you have a rate hike is not positive for the equity market.
It's not.
It's always positive for the fixed income market. But when you look at Nigerian fixed income plus the equity market thus far, through the rate hike or through the mental, you realize that the equity market is still doing well relatively than the fixed income space.
True.
So that tells you that, like you said, the transmission period in digesting that is also, it makes us feel like what we do, we are just doing theoretical economy to say this is it, this is it, this is it, this is this. But in reality, ordinarily, with the CBN governor saying in Brazil that we might be getting to that point that we are supposed to start cutting rates. You know what would have happened? The equity market will respond positively. Instantly. And so by now, we would have been seeing people pricing in that cut. But you're not seeing it.
Yeah. And I think that's something you mentioned on maybe they have information we don't have. So and if you ask them again, they will now tell you, okay, we're not only looking at the inflation rate to encourage us to cut or to retain the NPR.
Exactly.
But some of them, they will even tell you, okay, we still have high liquidity. And when you come, you start asking yourself, what is the high liquidity in the system? And when the authority will now tell you, okay, there is high liquidity, and if we now cut down that NPR, at least it will still increase the liquidity in the system.
Sure.
But you and I know that, okay, start asking now, where is that liquidity? And which is what we already pointed out, that at times there are certain things we don't have or we don't know we don't have. Maybe they have.
They will tell you that.
That's why they are holding.
They will come and tell you that money circulation is high, and you say, "Where's the money?"
Yes, where's it?
And they reduce liquidity, and you see the most vibrant sector in the Nigerian economy. Once you reduce liquidity, the informal sector is the largest employer of labor. The informal sector is the largest driver of employability. The informal sector is the key driver of the Nigerian economy. Once you reduce liquidity into that system, you are killing that sector, because that sector is largely driven by liquidity.
Yeah.
And it controls about 70 to 80% of Nigerian productivity.
Yes.
So when you see that, you reduce liquidity, you see the impact. That's why you see that non-performing loans in the banking sector seems to be high.
Very true.
Because you are hiking rate, you are reducing liquidity, cost of lending is going up, and there's no expansion. So sometimes when you look at it, you say theoretically this look nice for investor confidence, but on reality on ground, it's very different.
So what do you think is the way forward? What do you think is the way forward? About rounding off now, what do you think is the way forward?
I have said it over and over. I think we need to look at the precarity of our economy and begin to create policy rather than just looking at what IMF is saying, what World Bank is saying, what the normal economic theories are saying. We need to look at our economy. I'm saying that our economy is vibrant with the informal sector. How do we help this sector grow? How will fiscal policy help this sector grow? How will monetary policy help this sector grow? If we see that come in play, then what are the decisions that we need to take? So rather than doing this cut and paste or cut and copy that is global, we started this hike rate with the United States, with the United Kingdom. Today, the inflation is marginal. But ours is still struggling. We have to use rebasing to even get it to where we are. So that tells you that something is not working. And our inflation problem is not just driven by supply chain issue. We have an addition of FX liquidity and FX volatility. FX liquidity in the fact that how much FX do we have? Volatility in terms of the exchange rate, is it stable? Until recently, you have seen those 5 consecutive inflation. Look at the exchange rate.
Yeah, true.
You tie to it that the exchange rate has somehow moved and has been stable. That's why you are seeing that. So what is that telling the policymakers? Keep the exchange rate low, you'll be able to deal with inflation.
I think let me just add something there. I think on this inflation, if you look at the numbers released, you see that the reason why the headline inflation dropped because of the food prices, not necessarily because maybe there is much supply. Just like more supply due to season, because this is season.
Harvest season. Yeah.
So that is the major reason. Now, the other core inflation, like I mentioned, the other ones, the core inflation dropped because of the high cost of transportation, which is equally pushing the headline inflation. But I think going forward, like you mentioned, now they are going to MPC meeting on the 22nd. I think if you look at, we've been doing analysis on companies, and if you look at the companies' performance, especially in 2024 and H1 2025, you see actually what happened. In 2024, most of them sustained heavy losses because of one, Forex, FX. Secondly, high interest expense. Now, due to the stability in the FX, now in H1, these companies were able to come up and declare profits.
Yeah, true.
But the other leg, which is the interest expense, is still there.
It's still there.
Do you understand?
Absolutely.
It is still there, hitting them. It's just that they only got a reprieve from the FX angle. But interest. So it should now form the basis for them to really look at. I know what CBN is really looking at. Okay, like I mentioned theoretically, especially portfolio investors that are coming in, because if inflation rate is at 21% and the fixed income is giving you 15%, theoretically you are losing money.
Yeah.
And that has been the reason why they are holding the MPR, because if the MPR is high, definitely the yield on fixed income will be high too. You understand? To bridge the gap between the nominal return and the real return.
Yeah.
So, but I think they should overlook that. Yes, I know it is important, but equally look at the impact on businesses. Because most of them,
the impact on the financial sector.
Because most of them, especially the consumer goods, they are carrying a very high interest expense, and which is affecting their bottom line.
Yeah.
And if their bottom line is affected, definitely it will even affect both their profits and at the same time dividend to shareholders. So I think they should equally look along that line, not only on portfolio investment. Okay, we are trying to have a real return.
Yeah, I think in terms of the portfolio investment, I think they are just looking at inflow to stabilize the FX.
Yeah,
that's what they are looking at, and that's why That's why I still say the CBN may just maintain rate, because they want to have more inflow. They are beginning to see results.
Yeah,
that the naira is stable to the dollar.
So you think they will hold?
I think they will hold.
Idika, what do you think?
Yeah. I think they are likely to hold it because they are likely to hold it, like you really pointed out.
To hold it.
Yeah, they're likely to hold it because if they, according to them, what this is we are saying, they know better. They have information maybe we don't have, and if they hold it, they might argue that okay, fine. If we reduce, it might increase liquidity in the system. You understand, which will probably affect the FX. So based on that, they might hold it.
The banking sector, there's a new policy now, and it has to do with corporate governance. And one thing they're saying is that, if you want to resign, most companies you hear give them 2-month notice or 1-month notice. But this time, the CBN is saying banks must announce CEO 3 months before exits. 3 months before exit. What's your take about that? What do you think, Idika?
There's nothing to think of. It's a normal, in Nigeria, it's not as if we don't have the rules. It's not as if we don't have the regulations. The issue is just the implementation. This is just a corporate governance regulation. You understand, too, they have to use. So if the CBN wants to maintain it or to bring it to bear, it's okay. There's nothing wrong with it. It's already there.
Why do you think they are bringing it up at this point in time?
I think we've seen a pattern. And the pattern is the CEO of the bank, once it becomes the holding company, move from the CEO of the bank to the CEO of the holding company in the shortest possible time.
Yeah.
You will see those patterns. And I think, again, you have to also look at recently where especially in Access Bank.
Yeah, the one that happened in Access Bank.
When there was, sudden head of Albert Wigwe created a little bit of vehicle because somebody was acting. And when that person was pushed in for approval, regulators felt that he didn't have that competency to become the CEO of a holding company. So what that would do is that there will be a clear succession plan, which is very, very good for the bank.
Yeah.
How do you think
the
market will react to it?
Ordinarily, it should be positive.
Investor
Positive
sentiment, solid investor
so talking about corporate governance.
Corporate governance.
It's key.
It's key.
It's key.
I will give the banking sector is very key to the market, to the capital market, and if you allow such regulation to come to bear, definitely it will impact on investor sentiment.
It's key.
It's very key. Just like like I said, it's just like maybe you don't.
It's been there, like he said. It's been there. Normally, if you want to resign, they tell you sometime, depending on the level you are, you do 6 months. In that 6 months, you notice of going there, you need a transition to get into the new better. And what the CBN is saying that give us the name 6 months, then make it public 3 months before. So there's nothing new. 6 months, you tell us this is the succession plan, so that we have enough time to check it, so that we don't do what happened now that suddenly we have to do. Normally, what happened now, they may have to look for people outside the system. So the CBN is trying to make sure that you have succession plan in the system already. And normally the succession plan, ordinarily, if you look at before now, you realize that we used to have MDs and deputy MDs.
Yeah, true. So
once the MD is going, you see the deputy MD stepped in. But so that's what I think it's I don't see anything bad about it. I think
and you must inform CBN 6 months before
yeah, so that they can do their due diligence.
So that even the person that is coming in will now prepare, they will give approval, said, okay, we approve the appointments. So I think there's nothing wrong. It's always like that. Even if you go to SEC for brokers, before you can set up an asset management, at least you must have 3 sponsored individuals.
Yeah.
That will now carry the burden of the company.
Exactly.
So the laws are there, the regulations are there. It's just maybe somebody can just wake up and say, okay, let us
change it.
Let us implement. Let us implement it.
So you've heard from the gentleman. It's been a great conversation, ladies and gentlemen. From inflation currently at 20.12% down to what is happening with 9 to 5 from 9 to 2. And then we're having conversation regarding the capital market, what happened, the NGX closing on a negative note as of yesterday. And then corporate governance, which is a big deal. How do you think the market will react? We covered all this conversation on this episode of Market Watch. I would love to see you on the next one. Make sure you like, you share, you subscribe. My name is Frank, and then my surname is Fagbo. Cheers.